You were listening to chartingwealth.com for Wednesday, the 26th of August, 2015. We always start with IYY. It is the total market. This is what the market has been doing. Those of you who are viewing by the podcast, those of you who are listening via an audio podcast, I'll tell you what we see. We see a very, very narrow range of trading over the last year. It is reflected by the fact that the market plunged so much over Friday and Monday that it totally skewed what had been a good bit of movement in the market, but that was all sort of for naught when you had the incredible amount of down movement that occurred on the two-day candle for the 24th, and then the two-day candle for the 25th that's reflecting both the 25th and it'll also be reflected in the 26th. Looks more like a doji, with actually it's a green doji, not much up movement, not much down movement, particularly compared to the huge down candle and the incredible wick that's about, I'd say, twice as large as the down candle. Now, what does this mean for us? Well, we saw a crossover going down starting way before it occurred, around the 18th or so on our two-day chart. If we go to our 4-hour half-day chart, we can see it occurring about the same time. That move down widened over the next several half days until we, of course, had the huge move down on the 24th, and that was significant in the morning. Then the afternoon was a bit of a recovery, and then, of course, as we moved into Tuesday, we saw a bit of an up move in the morning and a down move in the afternoon, and the market was down 1.33%, ending the day Tuesday, moving into Wednesday, the 26th of August. Now, let's go back to our two-day chart and let's look at what the SPY has done. That's the Standard & Poor's 500. It also shows a significant down move on the 24th candle, reflecting a two-day candle. We had a down move on the 20th. That was actually on Friday, and then reflected by Monday and into Tuesday, we saw more significant down moves, another red down candle for the two-day candle on the 25th. We had a crossover again around the 18th. If we go and we look at the 4-hour chart, we see again a move about the same time starting on the 19th crossing over. We always expect there to be a lag usually between the two-day and the 4-hour chart as far as moves go. The 4-hour chart had been in a down move and it actually moved up on the 14th and then rotated back over on the 19th. And of course, everything is in down moves. Look at what happened from the afternoon of the 24th into the 25th. All of the movements that have been reflected afternoon of the 24th, morning of the 25th, afternoon of the 25th are all contained within the down candle from the morning of the 24th. So we've not moved down past that. For the record, SPY, the Standard & Poor's 500, was down 1.2% for the day. Now let's go back to our two-day chart, and we're going to look at the last. The Qs was the actual trade that we had talked about for all of you out there doing your virtual trades. If you will recall, we talked about how on the two-day chart it was in a down move starting on the 10th, and if you look at the 4-day chart, or I'm sorry, the 4-hour chart, you go back, it's hard to see with all the incredible down movement, but the chart actually moved up on the 17th and started crossing over around the 18th or so, and we talked about a down move and a trigger being shown for a move into the market. If you would have done that, you would have done very, very well in a fund like QID, which is a double opposite. It's basically an inverse fund that moves at double what the Qs moves. For those of you who are into that kind of trading, that would have been a good virtual trade. Now, you always hear me talk about virtual trades. We do not give trading advice. We are an education company. We talk about you training learning how to trade and then you making your own real trading decisions on your own, it would have been a fantastic virtual trade. You would have done extremely well, again, following our practice of waiting for the short chart to parallel the large chart. And that happens when the large chart finally takes on the move of the small chart, and then the small chart pulls back and then moves in the direction a second time of the larger chart, like it did around the 19th, was a good time for you to get into that down move. So that is where we are on all of our indexes. They're all in confirmed down moves on the long charts and the short charts. So pay attention. Now let's look at gold. We talked about this yesterday, about is gold topping off. Gold had considerable up moves that we called and talked about starting after it bottomed out around the 6th of August. We saw on the following Monday, the 10th, the up move. Then we drew our trend line starting on the 12th, and we have seen up moves throughout, except for over this last 2-day period. We've actually seen a down move for today. When I say today, I'm talking Tuesday the 25th is when I record this for Wednesday the 26th. We saw a down move on Tuesday of 1.24% in gold. Now that is shown by what looks like a red cross. It's not a doji, it's more like a spinning top. It means lots of indecision. The down move and the up move are very similar, although it is a red candle. Again, not a lot of movement. All the movements contained in about the center of the prior green candle on the 2-day chart. We're still above the 2-day trend line, so there is no confirmed crossing down. The MACD is still spread far apart, and the derivative oscillator is actually bigger on the most recent 2-day candle than it was on the prior one. So let's get a little more feel for what's going on by reverting back to the 4-hour chart. As we talked about, we have seen starting on the afternoon of the 24th, after the markets had crashed that morning, we see the 24th, we see where gold made its high and then started moving down as the markets started to stabilize more. We see a crossover going down this afternoon on the MACD, and at the same time, we saw the derivative oscillator flip over. That's typically a good sign for a move in that direction. Now, if we go back and we look at just the 4-hour chart, if you were just trading the 4-hour chart, you got in on the 27th on the up move, you would have done quite well. You would have bought in at a high of 105.68, and of course, if you would have ridden it up until today, well, up until yesterday, you could have made a high of 110. In fact, the low that day was 110.66. The low in the afternoon of Monday was 109.77. Even the low today was 108.82. So you would have done quite well in gold just following the 4-hour chart. There was a little bit of schizophrenic action in the 4-hour chart around the 10th through the 14th of, I guess that's July. But if you trace back, if you would have gotten in around the 23rd of June, you would have had a nice down ride on gold. And you can tell that the 4-hour chart over and over again appears to be making some pretty decent moves. So the fact that it's rolling over now and crossing over with the derivative oscillator flipping at the same time gives you an idea that gold could be about to sustain more down moves. Now, again, it's not pushed through the 2-day trend line, so keep a close eye on that for the time being. And let's just see what gold does. I hope that you had been listening to us. I hope that your virtual trades have been doing well based upon what you've been watching here. Again, if you've not yet taken our short course on trading, please let us hear from you. We'll be happy to send it to you, be happy to share it with you. We've got it available. We would be more than happy to give it to you. All you have to do is email us, cw@chartingwealth.com, and we'll be happy to send it out to you. Thanks so much, and it's free. We're not going to ask you for any money for it. We're just going to share it with you. We think you will find it very helpful. But thanks so much for listening to chartingwealth.com. We appreciate you, and we hope you feel likewise. Take care. We wish you the best in your investing from chartingwealth.com.